Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, March 23, 2015. Inside the numbers tonight, we're going to talk about the S&P E-mini, crude oil, gold, interest rates in the bond market. We'll talk a little bit about the U.S. dollar and where I think it's going and when. First, I think what we'll do real quick is just start off with a review of Wynn Resorts real quick before we go over to the S&P. Reason is because Wynn had another update today. We were up a little bit more earlier, but remember, members were in this trade from 122, even beneath 122, and Wynn today was up actually $5 or $6 at the high. It was up at 136.36 at the high. Anybody that's in this trade should have a trailing stop in or have taken some profit and have a stop at least in the money and let this thing ride. Nobody should turn this into a losing trade at any point in time whatsoever. Should at least book some profit here and let the rest go. Let's go back to the SPY. And here's your daily chart. And, you know, we had a pretty big week last week in terms of up days. And it's not going to be out of the ordinary for this week to kind of drift sideways to lower. But that's an opportunity, folks, because it's an opportunity to buy the market because it's going higher, okay? Unless we get some kind of a close below this 203.50 from before, or even, you know, if we start to come into these lows down here, you know, I'll reassess. But for now, as long as we stay inside this level here, which the low would be 206.62. As long as we stay and close above 206.62, we're going to be in a bullish part of this market, a bullish phase for this market. Now, what do we need to do to go higher? Well, basically, we need to close above these highs. And once we close above these highs, we go right to the 212.97. That's from this print over here. And then we have even a higher number than that. And the corresponding level in the E-mini contract, if we close above these highs, which is about 207, 208, 2007, 2008, then we go up to 2020 and then 2030.35. And those are the corresponding numbers in the E-mini contract. So one step at a time. First, we'll go back to the SPY. First, we have to close above these highs. And I would not necessarily expect it this week. In fact, I would expect somewhat of a drift downward week all in all, at least for a few days, just to work off some of this upward movement from last week. It's a short-term overbought condition, and it's not out of the ordinary to have to work some of that off. All right, let's go over to gold. Okay, here we go. Remember, as long as we stay above this downsloping trend line, then we're in good shape. We had another positive day today and a confirmation above this trend line. So that's 2 days above this trend line. We'll see what tomorrow brings. But also, just like the stock market, like the S&P, you could expect the gold market to run into some resistance between $5 and $10 higher from here. So 1195 to 1200, which is also this corresponding level in this area here. Okay, you're going to find a fair amount of resistance up here. So you can look for also somewhat of a pullback. And if you were lucky enough to get gold down in the 1170, 1175 range sometime later this week, that would also be a buy zone. We'll see how the week plays out, but just keep that in mind. And that would correspond a little bit of a pierce at the time inside this 20-period moving average. This is going to start moving across right now. Okay, so let's go over to crude oil. This is a good one. All right, so we have something brewing in crude oil. All right, and by the way, let's go back to gold. By the way, the corresponding level in GLD is about 115 and a quarter, 115 to 115 and a quarter. You're going to run into a lot of resistance up here, so you can look for a pullback. And if if you're able to buy it around 113, that's going to be a buy zone for the GLD. In fact, what I'll do is I'll put this I'll put a level right here, and we'll just keep our eye on that. In fact, I'll change the color as a buy zone. We'll make it green, okay, and we'll leave that as a buy zone, okay. So we'll see what happens over the next several days. All right, let's go back over to oil. We have something brewing here in oil, and I want to bring up a 60-minute chart because it's better to look at and see what I'm talking about. Okay, so Friday's up move right here. All right, and remember, right now, well, this was even before, for this was Wednesday. What happened was last week I put out a trade alert to members that I said that oil had had the propensity into early part to mid part of this week to spike higher, and we've started to see the beginnings of that. And if we stay in this area, and if we start to close hourly in this zone up here, you can look for higher prices in crude. And in fact, let's go back to the daily chart, and I'm going to show you something else I'm looking at. You see this trend line. Now this is the April contract before, oh, I'm sorry, we should be in May. Okay, we should be in May. All right, so here, let's draw the trend line in for the bottom part of our channel. No, that's not it. Let's try that again. Just bear with me, folks. I want to draw that in because it's important to look at. We know what we're trading against. All right, that's not bad. Okay, so maybe we come to the underside of this trend line, and we may pierce above it. We may get to $50. So call it $49 to $50 if we can get there this week. And there's one other reason why I think it may be a possibility this week that we get a spike in oil like we started to see last week, and it's the dollar, okay? So oil, not every day and not all the time, but right now oil is trading somewhat inverse to the dollar. And the dollar, as you can see, is still headed downward, and we'll get to our buy zone in the dollar in a little while. But as long as we continue down, and the reason I say oil also, it's just a confirmation of my oil indication, is that I have some more weakness penciled in here for the next couple of days in the dollar into Wednesday. So if we can get some more weakness in the dollar, and we can get a little bit more momentum into a spike in oil, okay, so if we can get to, for example, if we can begin to close hourly and then have a daily close at least tomorrow above 47.5, then I think we can take a quick shot up to $50, $49 in, I want to go to the May contract, in crude oil. So that's what we're looking at. We're in the trade. This went out to members on Friday, so we'll see how it plays out. We'll see what kind of momentum we can muster on the upside, and see if oil can take out some of the resistance points. And you have one resistance point here that's at 47.48, and that's why I need a close above 47.50 in order to get that rocket fuel lit on the upside, and we can get up into this trend line here. And then if we get into the trend line, your upper range is only going to be to this level here, and I don't even think you get up that high, but your upper range is only about $56. What would that be? Yeah, $56 is your upper range of this trend line. I don't even know if you get that high, but if you got into this trend line, you might want to go up to the top of it. We'll see how that works out. Let's go over to the bond market real quick. Let's see if we can bring up the TLT. All right. And so as you can see, we were in the TLT from 124.25. Now you're also going to be into an area in the TLT where, you know, we're going to probably pull back for a few days. You've had a lot of days in a row up in the TLT, and it's going to be tired. And we came into, hold on a second, I just got to switch my cursor. We came into this gap window area. We're kind of close to it. So maybe we get a spike into that tomorrow, and I would expect a pullback if we get it, or even maybe it just gets tired up here. But if we can move sideways for a few days and stay above this 50-period moving average, maybe higher prices. But we'll have to see how it plays out. It's just getting tired. So anybody in this trade should also have a trailing stop, have taken some off the table, a stop in the money, some way to protect that position, because this is a nice move in the bond market. Now, there most probably is higher prices coming. It's just you may have to pull back for a while first before we can take another push higher. Just take a look at the flip side of the bond market of the TLT is the interest rates. So I'm looking for interest rates to come down into this low at about 1.8. So if we can get that, we'll see the corresponding move higher in the TLT. That would leave us up in this area at 136. But it's not all going to happen at once. Markets never go in a straight line. Moves up, move down, move up, move down. That's the way they go. We're just follow the trend, and we do what the markets tell us what to do. Okay, anything else? Yeah, the dollar. We want to go back to the dollar. So I have an indication that leads me to believe we're going to see another couple of days of weakness in the dollar into Wednesday of this week. So if we do, and we come into this trend line or even into this zone here, we're going to be looking to buy the dollar. Hopefully oil have gone higher and we'll be profitable on that trade, and maybe we'll even get an opportunity to flip that around and short oil when we get a bounce in the dollar on the upside, because once you get into this zone, even at the top of the zone, you should begin to look for a bounce in the dollar. Down in this area here, this day, which has a low of 94.76, 94.765 to be exact, if you came into that level, that's a buy with both hands, because that's going to act as support from this low. This only happened in a span of a couple of minutes. It was only down here for a minute or two, and then it only took like 5 to get from here to here. And then, so if we came into that area, I think you'd find a lot of support there. So I'd be looking to be a buyer of the dollar in this zone here for sure, down in this area. Okay, I think that's about it tonight. We're going to leave it there. Hopefully this has been helpful. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in.